Hey there, this is David Cox, Senior Portfolio Manager of Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, April the 17th, 2026. Let's get started. We will sort off by week. You see growth stocks of all kinds and flavors, pretty much up at the top of the list here. Oil continuing to pull back here in the short term from the perspective of a long-term uptrend that I believe has begun. Just a reminder, pause your video player at any time for more details. So get again this concept of sales, right? So I always laugh, and I like to use this as an example. When there's sales and kind of opportunities to save money at the grocery store, a lot of people will run out there. But when it comes to the stock market, for some reason, we don't want to buy into sales. We don't want to buy into dips. There's always this fear, of course, that it's going to become bigger. We seem to have had an annual sale, and the reason I'm saying annual is because again, RSI 5 on the weekly, which is what I like to show quite often. Doesn't happen very often, tends to happen about once a year. And we just went through one of those periods. And the bottom line is that stocks are on sale, and they tend to go on sale when there's lots of narrative and lots of news, as you know. Now, this has also been something very common. We've had a lot of V bottoms. Now, V bottoms back in the day used to be very uncommon. And the reason is because they're quite, arguably unstable, but you've got basically a sell-off that takes stocks down, and then essentially they go straight back upwards, and they do not offer even any opportunity to even pull back. They don't sort of create any kind of degree of what used to feel like a stable base, if you will. And you can see here on the right side, this is the NASDAQ 100, basically going straight up over the course of the last couple of weeks. One of the things that's being tossed around a lot recently is this concept that, again, there's not many stocks at highs. And so I thought I'd just take a quick look here this morning. You can see here that a year ago, when we had another V bottom, essentially coming out of last year, and the average stock in the NASDAQ was down about 15.1% when the market went on to make new highs. Now, today, or yesterday, I should say, when the NASDAQ made new highs, which it did, the average stock is down about 21%. So again, remember, a market it's a market of stocks. It's not a stock market. I think we should always kind of remember that, right? Different things can drive different markets. I like to continue to check in on this kind of time frame here, right? So since the war with Iran started, you can see what's gone on here. Bitcoin has led the field here. Yields have gone up, so they have not in any way, bonds have not offered any type of safety. You can see the U.S. market back to outperforming Toronto, which is actually down. Gold has actually come down, and volatility has come down. Energy stocks. Now, again, with crude oil in what I consider to be probably a new uptrend, it looks like, we can see the pullback here. iShare Energy, which has been much stronger than the U.S. counterpart, down about 10% from peak to trough in the short term. Canadian Natural Resources, one of our large cap players, we took a position this week and in the pullback here. But at this point, we've got pullbacks happening in all the energy stocks. And again, if these are the start of something bigger, short-term pullbacks is what you want to look for opportunities to participate. We've talked before about these Canadian banks. They have been very strong, right? Canadian banks have not been performing like U.S. banks, which have been much, much more laggards. You can see on the left side, that's the BMO equal weight banks. That's the ZEB. Okay, so it took quite a while actually to break out above those 2021 highs. Didn't really happen until the beginning of 25, so only a year ago. They've been outperforming certainly the Toronto market since. A couple of the strongest names have been CIBC and National Bank. Both of them we looked at recently in this webinar. And again, I showed you the green circles where our All in Sync and our clients would certainly participate. And just yesterday, we took a little bit of a trim out of those. Why? Well, again, things don't go straight upward forever. This has been a pretty impressive rally on many risk assets. And so from that perspective, I would rather, of course, buy the dip, if you will, and sell and trim into the strength, okay? Because again, things don't continue at these pace forever. Here's a couple of new kind of bars here. We're gonna call the bar again. Again, this refers to candlesticks. I like to look at candlesticks, of course, on charts. These are a couple stocks. One is Rocket Labs on the left, $47 billion, and IonQ from the quantum space. Both of these produce the bar you can see in the green space, and so those are kind of change of character kind of bars where you suddenly have a massive amount of demand that overwhelms supply and kind of offers that opportunity to say, hey, it looks like the trend is sort of changing. I think those opportunities are very, very timely because they offer inflection point identification. You can see that the fourth quarter rising is what exactly I like to see, which is essentially the number of reporting funds and issuers that are continuing to acquire the stock. And you can see what's been going on here. There's been a lot of growth in these areas, or these stocks rather, in the course of the last year and a half. Now, software has been very weak. We've talked about it before, but software really has been a very weak segment, industry group of technology. You can see on the left here, Oracle, which is actually the largest component of the software ETF. That's IGV. You can see on the left side, Oracle on the weekly chart. This is higher highs, higher lows. Although that was a 61% sell-off from the recent high, which was in the fall of 2025 to the recent low. You can see the outperformance versus software over the years. This has been quite a strong stock. So again, and from this perspective, again, or certainly I have the perspective that, hey, here's a weekly chart. This looks still interesting. And if we're going to go and talk about the concept that sort of inflection points again of where software sort of maybe has come down far enough, you look to a leader, you look to one of the larger players, and there you go. We've had the bar, it came off the low, and you can see now we've got a higher low in place on a daily chart. But again, a lot of selling. We certainly participated here, and again, it'll be interesting to see whether this stock leads, which it has been doing for some time, and certainly guys continues to maybe perhaps lead the other software leaders back into the game. This is I'm going to talk about these blockchain stocks for a while. Haven't looked at them in a while. We've talked about before about BitQ. I'll show you the chart in a second here, but this is BitQ versus Bitcoin. You can see in the last year we've actually had outperformance over the course of that year of those kinds of stocks. So again, it's kind of like the same as energy stocks versus oil, or copper stocks versus copper. This is, again, we're going to call this the crypto miners, the blockchain stocks versus the underlying, which we'll call Bitcoin. And so from that perspective, that's actually, I think, very bullish from that perspective, because if you look at the BitQ, which we have looked at before, here's all the corrections over the course of the last several years, and they're fairly deep. This is a fairly volatile space, no doubt about it. You can see the most recent correction in 2025 was about 47% down. Now, if you can believe it, even since the start of this year here, from this low point to the recent point, we're up about 41%. Again, we've been sitting with clients for these positions for actually years at this point. And again, a lot of volatility, but that is why, again, we want to always understand time frame, and we want to continue to understand character. Saputo is a large global dairy producer based in Canada. Stock was a massive, massive beast. And I'm just talking about lower left, upper right. If you look at the left side of your screen here, this is back to the early part of 2000, straight through to 2016, where it essentially peaked. But in the recent year, it's actually been going upwards. And you can see this is a daily chart. We just had that biggest bar against, I think it was on Monday, actually. And you can see massive change of character, right? So why is that? I don't know. I frankly don't even care, because it's been an underperforming stock. But the point is, it's in the consumer staples sector. And this week, as I'll show you, the consumer staples have been quite weak, which is another sign of offense and risk on in the market. I wanted to kind of just almost poke fun at this kind of situation. So this is the BJK, which apparently has been delisted this week. I didn't realize that. It's changed names. It's now GENZ. So this is a situation. Here's the chart over the course of the last many years. So underperforming, right? What was this? This was a gaming ETF, casinos and gaming and gambling and whatnot, and really hasn't done very well. Those stocks have not performed well. So the issuer VanEck has gone and changed it, and it's now called the digital native economy, which of course sounds a little more kind of topic du jour, if you will. And so it'd be interesting to see whether the performance change. I don't know whether the composition changes, but again, at this point, it's been a sideways range bound stock over the course of the last 6 or 7 years. We'll finish off with sector watch here. You can see the technology stocks bouncing back strongly. Remember, Toronto is not very diverse, so larger performance there. But again, that's been quite weak. Again, the trends, certainly on the short term, you can see have all turned upwards. But look on the bottom. We've got healthcare, staples, all on the weak side, and utilities. So again, the market has definitely moved to risk on. Is it short-term overbought? Of course it is, right? Markets don't go up like this the last 2-3 weeks in a row without pause. They will pause, they will pull back. But the point is, when those pullbacks happen, those are sales. And we want to look at those as investors, as I started this day off showing and participating from that perspective, not allowing the narrative to guide our feelings. Just to finish off here, this is our portfolio. I didn't show it to the end of April here, so I've just caught this up. Year to date, our all in sync portfolio is up 13.5%. And there's the returns going back to the inception of January 20th of 2025. If you have questions, please ask. And lastly, follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, portfolio manager at Financially in Sync in Waterloo, Canada.